Happy Monday, everybody. We are back in the saddle again. Hope everybody is doing all right. I am glad to be back from a couple-day hiatus with my Prosper buddies. How's everybody doing? Let me know if you can see and hear me okay. I see lots of hellos in here already. That is a good thing. Karen, happy Monday. It is. Steve, John, Chris, Leif. There we go. I love that entry there. What's your options? Trading Den. Hulk smashed the like button. Awesome. Awesome. So let's talk a little bit about what's going on overall in the market. Obviously, a lot of tension, a lot of concern. Okay, what is that tension? What's that concern coming from? Let's talk about the eco data first. So the data that came out last week is showing the consumer is not only starting to pull back a little bit, but the consumer is really starting to get concerned about inflation. So that's not good. That is not good. Now, we know that can change really quickly, but the consumer makes up almost 75% of GDP, of all spending that's out there. So we're going to get a few really big economic numbers later this week. Okay, we're going to get PCE. What is PCE? Personal consumption expenditure. That is the measurement that the Fed looks at most closely, even more so than CPI and PPI, to really take a deep dive into what's going on with inflation. So that's number one. That'll be huge later in the week, and I expect some volatility to pick up before that. Number two, real consumer spending. Okay, so not retail sales, but we're going to get a real consumer spending number later in the week that might bring out exactly some of the info that we saw last week about the consumer. Are they dialing back? Okay, those are and then GDP we're going to get also, but GDP actually is pretty secondary to PCE. So that's the big eco data coming out this week. And then, Wednesday after the close, NVIDIA earnings, that all eyes are going to be on NVIDIA earnings. And can it be a market changer? It could be. It absolutely could be. It's going to really, just like most other stocks that we've dialed into, it's really going to come down to more about what their guidance is than anything else. So this is going to be a big week, but that tension that we're kind of feeling, or that the market is feeling right now, that volatility that's picking up, to be honest with you, and again, this is not political in the least bit. I don't go there. I don't want anybody here going there. But that tension's coming from Washington, guys. So until that goes away, which I don't see that going away anytime too soon, that's just going to be another catalyst for volatility to remain in the marketplace. All right, guys. Today, we're going to go rapid fire. Okay, we are going to go rapid fire here. What does that mean? That means you guys put in the chat here anything you want me to look at, whether it's an earnings stock coming up, something you may have, and I will try and get to as many of them as I can, and we will look at the charts together. Before or while you're doing that, and I will review back in the chat here stocks to look at, I want to let everybody know of a special, and there's no cost to this. I'm not pushing anything on anybody here. There is no cost to this. We did this last month, and we got such a major response and asking if we would do it again. We are going to host our coaches roundtable tomorrow. We're going to be looking to do this monthly at the end of every month, where all the educators here, myself, Charlie, Mike Patton, and Dan O'Brien for futures, You're going to get all of us in one session here, answering your questions, talking about strategies. What have we seen? What can we expect? Again, there's no charge whatsoever, okay, for this. Just tune in tomorrow afternoon at 3:30 Central Time. The link is in the chat here. It's also, I think we're going to put it up on the board, okay? Jeff is great. Jeff will be in this also. Jeff is great. He flew back to Chicago today with everybody else from our retreat. All right. Back to our rapid fire. Okay. Bobby, Jeff is the other trader in my rooms. All right. Mike Clark, how many smashes do we have right now? And I'm gonna write down here, guys. I'm gonna write down stocks so I don't have to keep flipping back here. NVIDIA, STX, Qubit. What else we got here? Palantir. Is that Dean Cook? You put in ADMA. Did you mean ADM or is it ADM? 27. Get us to 30 here, guys, so we can progress. TTD, got it. Okay, we got a bunch to start with here, everybody. And if there's something that you want to look at, again, just 35. Great. Just put it up in the chat here, and I will try and get to it. Okay. Here's the video, guys. Okay. This is one, in my opinion, clearly going into an earnings report. There is no way that you could identify any kind of chart pattern here. Total crapshoot. Okay? Total crapshoot about what's going to happen here. Are they going to have incredible earnings, record earnings, in my opinion, much like Walmart did? Yes. Okay? That's not going to move the needle. What's going to move the needle is, what are they saying about AI going forward, right? Was there too much spending already in AI? Was there not enough? How is everybody responding to their chips? Blah, 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 yada, yada, yada. So when I look at this chart here, and can everybody see the chart that's up here now? Okay, great. When I look at this chart from a technical standpoint, the only thing that sticks out to me is the blue line of the 200-day moving average. Okay? Now, why do I say that? Got close way back here, didn't quite get there, dipped below the 50 and got to the almost to the 200. That was a year and a half ago. The next opportunity, the next chance that this thing had to trade down to the 200 was very, very recently here, right? This was just over the last 3 weeks when all the DeepSeek stuff came out, right? And the stock really plummeted, but it rebounded real quickly. That was a really, really positive sign that it rebounded quickly. Okay, now, if I tighten up this time frame a little bit, this is a 2-year time frame you see here. If I tighten that up just to 3 months here, shorter time frame, we're starting to see some lower lows and lower highs. Okay, so again, that's why I think going into NVIDIA earnings here, if you're bullish, take a bullish position. If you're bearish, take a bearish position. We will look at this tomorrow and Wednesday, probably more coming at it as looking at an iron condor or a strangle swap, and really just trying to take advantage of volatility and not necessarily direction. Okay, as it stands right now, and this could change a little bit before Wednesday. As it stands right now, let's see, NVIDIA is 135 basically. So the expected move in NVIDIA is about 12 to 13 bucks, kind of right at about 10%. Okay, about a 10% move. So let's go back and look at the charts and say, okay, if it is a 10% move, roughly 12, 13 bucks, does that line up technically with anything? Well, on the downside, that gives us 121, 122 area. That 200-day moving average is 125. So that would put that right into kind of that low range after DeepSeek. And on the upside, it puts you kind of right to where we were right here. Okay, so again, we will look at this tomorrow and Wednesday, but given what the expected move is, and given that the downside is kind of right to there and the upside is right to here, I think a strangle swap might work great in theory. We have to look to see what the volatility is. So that is my take on NVIDIA, of which everybody is going to be, having their eyes and ears on. Let's look at Palantir. For those of you that happen to tune in this morning, I was on the Schwab Network earlier this morning. Palantir was one of the stocks that I talked about. Okay, it's been a darling. It's way off the highs just from last week. Just from last week, it's down 20%. Okay, got the big rise up after earnings. To me, we're kind of in the middle of no man's land, but getting closer to a pivot point, getting closer to a buy point. This gap right here, right from earnings, okay, which was at basically 84 bucks, let's call it. Okay, if Palantir were to come down further, fill that gap, you're looking at $84. What else is really special about $84? That is former resistance. Former resistance can become now support, just like former support can now become resistance. So I really love this area based on the gap fill and this. If Palantir was, on its way back down, it's sitting at 93 right now. Does that mean I wait right till 84 to get in? Probably not. Stock starts to get to 85-ish, 85 half or so, I am absolutely going to start looking at an entry. And depending on implied volatility, that'll determine whether we want to sell put spreads, buy some upside, whatever it might be. So that is what I see in Palantir. Let's go to American Express. Again, I wrote down a bunch here, guys, of what you guys have in the chat. I'm going to try to get to them all. If I don't happen to get to it, it's not because I ignored it. It just means we got a lot that we're going through right now. And feel free to send me an email and I'll do my own personal review and send you my thoughts on it, okay? AXP. Wow, here's one. Here's one where, boy, the 50-day moving average in the past was like the end-all, be-all. And now we broke. Now we broke. Okay? That's not a good sign. Now, if it happens to recover from this point and gets back to the 50, which is what, 307 from there, then I would consider taking a long position. Otherwise, this thing probably is going to just keep meandering back down here, maybe even down to the 200-day moving average. Okay, that number that comes out later this week about real consumer spending, that could really affect AXP, Visa, MasterCard. And I think MasterCard also has earnings this week, if I am not mistaken. Okay, the old GC. And actually, to bring up the gold futures contract, I can bring up GLD, which is the ETF, but I'll bring up futures contract itself, which is those of you that use Thinkorswim, that is /GC. Okay, here is backslash GC, all time highs. And really quickly here. Now, I'm not one to buy into these rallies or sell into the big downdrafts unless there's a pullback one way or the other. So I wouldn't get in gold right now. However, if there's any sort of little pullback, and to me, just looking at the charts here, okay, I would see the next area below of a pullback kind of being right here. So right around 2,900. I don't know if you're going to get the chance to get it at 2,900. Maybe it goes to 3,000, 30, before that. That would be the target area I am looking at. Okay. So this is anytime for those of you that are on the Thinkorswim platform, if you're going to use or try and look up a futures position, okay, the key is to always hit backslash first. Okay. Someone wanted to look at silver futures, same thing. Backslash, you'll see, and then SI is the signal. Okay. Silver has not been like gold. In fact, there's something out there called the gold silver ratio that over time measures how expensive gold is to silver or how cheap is silver to gold. Historically, that ratio is somewhere around 60-1, meaning the price of gold over time is typically about 60 times as expensive as silver. Now, that has obviously exploded recently as gold has just reached new high after new high, and silver, albeit that it has rallied, has not broken out like that. So that ratio now I think is around 95-1, meaning historically, one of two things. Either gold is really overpriced compared to silver, or silver is really underpriced compared to gold. Now, that's only useful if you're going to do what's called a pairs trade, buying one, selling the other, trying to arbitrage. If we're just looking at silver here, silver is really no different than gold, in my opinion, in terms of buying pullbacks. I'm not going to buy into a rally. I will buy a pullback. Okay. This yellow line right here in silver, this big yellow coming across here, that's right around 3120-ish, 3130. That's a big volume area here. That's the next area I would be looking at, okay, to take a real good look for a bullish position in silver. Okay, one that comes out after the close today. And Mike Clark, how many are we up to right now? Probably do this before we move on. Yes, week 44. Okay, we got to get to 50 before I go back to the next stock, which will be HIMS. Here's our word of the day, guys: chaos. Because I see nothing right now but chaos in the marketplace. Not chaos meaning that, boy, the market is set up for a 10% drop or anything like that, but just chaos in the sense that there's no clear-cut direction right now because the news flow is so fluid 24/7. S&P is trying to get back to their highs of the day right now. We've had quite a range. I think the high of the day earlier may have been up 35 points or so. We got a low down of negative 30 points on the day. Now we're up, what are we up right now? 16 points. Okay. Mike, what are we up to? Did we get 50 yet? Still at 44. Come on, you guys. Light me up here. Come on. Can't just be at 44 still. Let's go. Wow, Boeing making a big move higher. Can I get 46? Can I get 47? 48? A lot more eyeballs than that. Gene, I know you've been in on it. I appreciate it very, very much. And a great shout out to Gene for exiting out of those puts in Shake Shack today. Nicely done, sir. Nicely done. Mike Clark, what are we up to here? I want to get back to the board here and look at hymns and hers and hymns. Actually, there's no hymns in my house. Everything that's mine is my wife's, so it's all hers. As well it should be. As well it should be. All right. Let's go to hymns. Okay. There was some news out last week that made this stock skyrocket up here. And now it's come back to earth. So again, here you are right here. You look at this technically, say, what the heck do I do with this? Right? There is nothing here that gives me any sort of bias, technically. Okay, but let's look. I'm going to go through a strangle swap with everybody right here. Is that okay with everyone? If we take the time and actually go through, in my mind, and I'm going to show you the charts, what I look for here to see if a strangle swap would be something that is decent here, meaning that we're looking for a move in either direction, benefit in either direction. Okay, hymns. Stock is trading 50 basically. What is our expected move for this week? Okay, stock at 50. Our expected move is probably 10.5 to 11 bucks. It's about 20%. It's about 20%. So before I even go back and look at the charts, if I just take that expected move, that gives me basically a range of, let's call it 39 to 61. Okay, does everybody follow how I'm getting that range of approximately 39 to 61? That's what the market is pricing in for a move this week with 68% probability. Okay, before we look at the options, let's go back to the charts for a second here and look at that 39 and 61 range, see if there's anything notable. Okay, let's shorten this up here. Okay, so the 50-day moving average is 35. Now, what I like about that 35 spot on the downside is just like we were talking about earlier, and I think it was Palantir, about prior resistance. This prior resistance here is right in alignment with the 50-day moving average. Now that 50-day moving average, that alignment area is 35. So it's, a little bit below what the expected move is, but 35, there should be some really, really big support in this stock. Wish I could spell. Now, on the upside, that expected move was around 61 or so. Okay, what's up here? Not a lot. I know it traded through there last week on this news, rejected really, really big. So rather than looking at 61, okay, I would look more at the 60, 5-ish level where this thing topped out. right around 65. So again, the 39 and 61, that was the expected move range. If I'm going to look at a strangle swap, I am probably looking more at the 35 and 65. I'm going to expand that range a little bit. Okay, is everybody with me right now? Because now we're going to go look at the options to see if, from an implied volatility standpoint, if it makes sense. I really like the 35 and 65 area. Okay, let's take a look. And before we look at the options, let's one more time put this up here because I know we're getting, wheel's going to get closed here in just a minute or so. So we'll give you a last opportunity here to get that up on the board. Okay, let's take a look at 35 and 65. Now, those of you that have tuned in before, those of you that have sat through my class and we've gone through earnings plays and what happens to volatility, if we look at the 35 strike here, okay, it's only a 35-cent option, 35 and 35. It's only a 35-cent option. Okay, not a ton of premium to sell there, right? I mean, not something that looks for 35 cents like I want to sell, even though I'm going to sell something or buy something against it. So let's look at the 37 instead, which puts us right in between the expected move in that 35 range. Okay. Now, the current implied volatility, which is almost immeasurable, 237%. What should I change that to for our evaluation purposes? Where do you think that vol might go after earnings? Anybody? Down, absolutely down. Ivy crush for sure. But what should I evaluate it at? How much is it going to go down? Ballpark. Bingo. Thank you. Aiden, I'm going to take that answer. We're going to run with it. I'm going to make this 120. Roughly half. Nice job, Pat. Good. Now, let's do the same thing on that upside. Okay, we were looking at 61 on the upside. Now, what are we looking at here? Hang on a second, guys. If we're looking at equidistant from where the stock is right now at 50, and we're looking $11 down, and we're looking $11 up, okay, shouldn't the option pricing be roughly equivalent? It's not. The 39 strike put right at the expected move, 86 cents. The 61 strike call right at the expected move, double. What does that tell us? What does that tell us if an out of the money call option, same distance away, is trading basically double the out of the money put option, same distance away? What does that tell us? It doesn't mean the stock is bullish. It tells us that the bias out there, okay, the skew, there we go. Nope, Ken, it doesn't mean expected to go up. What it means is people like you and me and everybody else in the world are expecting it to go up. the bias, the demand is on the upside. That's why those upside options are priced so much more expensively than the downside. So remember what we did here when we look and we adjusted down. Okay, good, Steve. When we adjusted down to the 37 strike, okay, that's $13 away. That thing was trading 55 cents. If we look at the 64 strike, which would be $13 away on the upside, it's almost triple. It's almost triple of what that put is. That's insane. That's insane. So it doesn't mean that I don't want to sell that option. But just kind of think through the logic on this. What might I want to do with those strikes? I'm fine on that 37 put on the downside. What might I want to do on the upside? We're going a little longer today, guys. I'm going to finish through on this, so don't worry about it. Yeah, widen. I'm probably going to choose to go up a few more strikes from there. Maybe I'll go to the 70. Okay. So I'm going to do the same thing. I'm going to drop this IV in half. So right now, what I have is just on the sell side, what we're selling, the 37 put, the 70 call. Okay, now let's look for next week. Next week, where are we? 37 put and 70 strike call. Well, before we do that, I want to see where's volatility. Okay. Where do we all think volatility for next week's options? Where do you think they're going to settle in at, regardless of where they are right now? Where do you think they're going to settle in at after earnings? They're going to revert to the mean, much lower, 50 to 70. Yeah, probably not that low, because if I look here, the absolute bottom over the last 6 months or so is right in here. But I would feel comfortable pricing those options 90 vol or so. It's a good job, Kay. We usually talk about a 40% drop there. Good job. Okay. So let's take a look at that option montage now. These 37 puts for next week, currently trading 172 vol. I'm going to take those down to 90, which is about 45% lower. 70 call, currently trading 182. Okay, again, we're still even seeing that skew next week, right? The upside calls have a higher volatility than the downside puts. So I'm going to drop this about that same 45% or so. Let's put that in at 95. Oh, and I just cleared that by accident. Okay, the wheel is closed, by the way, guys. So right now we have a strangle swap that's pretty cheap. Probably costs, I'm going to say we could buy this for $1.05, maybe $1.10. Strangle swap meaning we're buying both a calendar call spread and a calendar put spread. Does everybody see that? Okay. Now, how do we know if that's a good do or not? How do we know if that is too expensive, too cheap, right in line? Where is it going to make money? Okay. First off, Let's say we paid a dollar, whatever it is, $1.05, $1.10, doesn't matter. What's our risk? What is our risk, everybody? Yeah. So nice job, Ron. Worst case scenario, stock goes to zero, stock goes to 200, whatever it is. We can't lose more than we pay. Okay. We can't lose more than we pay. Now, where do we want the stock to go? That's the easy answer. Everybody should know, even if you don't understand the theory behind the strategy, we want stock to go to the short strike. We want, in this case, since we have two short strikes, we want the stock to go either to 37 or 70. And here is what that looks like. Okay. You see anything green in here? And I've pushed the date ahead to Friday's expiration date. I don't see a lot to the downside, which makes me think that I might have something wrong in my assumption here to the downside. But when I look to the upside, where is the peak on the upside? Where is the highest amount? Boom, right here, right at the short strike. Where don't we want the stock to be at expiration? Pretty much in the middle or unchanged. We want that move to one of the strikes. So let me just go back here now and take a look at what I did here on the put side. That to 120. Maybe I've got to raise that a little bit, but I really don't want to. And now really evaluate this. Okay, so made it a little bit better on the downside. Not much, but it's a really nice graph on the upside. Does everybody understand what I'm looking at on this graph here? Again, this is looking post earnings, volatility's adjusted, and I have pushed the date ahead so it reflects all premium decay for the week. I pushed the date ahead to February 28th. Does everybody see that? This is not think or swim, Ty. This is a different platform that allows me to adjust volatilities, adjust dates pretty much on the fly to get a clear, accurate reflection of what a position would look like. Does everybody see that? So I would not put this position on right now because even though it looks good on the upside, it doesn't give me any benefit to the downside. So I'm not saying we wouldn't do anything in there. What I'm saying is I got to look a little further into the downside and why it's not lining up like that. But this is how I go through looking at a position like this. All right, guys. I know I did not get to a lot of the stocks that you guys wanted to. If you shoot me an email, I am happy to research, send you what I look at. Okay. But I thought it was pretty, as Larry David would say, pretty important to go through the methodology on how I would look at something like that, especially something a bit more complex like a strangle swap. All right. So, with that, let's get to our first wheel of the week. And away we go. Are we going to have Frank, Gene, Gilbert? Gene. I'm sure Gene is in the house. I'm sure Gene is in the house. Are you still here, Gene? I know you were earlier. Oh, Gene, I'm giving you 5 seconds. 4, 3. I'm trying to stretch it out for you, Gene. 2, 1. Oh no, Gene. He probably went to the par 3 golf course. Oh, he just made it. Literally just made it. Okay. You know what to do. And the same email address that we're going to post up here, guys, about emailing me Prosper Swag, you can email me if I missed a stock that you wanted to look at. But what I want to end with today, again, there is no cost to this tomorrow. Okay. This is a free monthly roundtable. All of the Prosper coaches. You're going to get us all tomorrow at 4:30 Eastern Time, 3:30 Central, 2:30 Mountain, 1:30 Pacific. Harsh, you're in India right now. Couldn't even tell you what time it is. Probably, I don't know, 10 at night, 10:30 at night, something like that. If we can post up the link to register for tomorrow, Mike Clark, one more time, that would be great. Again, there we go. I want to emphasize there is no charge for this tomorrow. All right. Last month we had a record number of people there, which is why we're doing it again. All right. Thank you, everybody. I know I kept you a little bit longer today, but that's okay because I wanted to make sure that we finished at least going through that concept. We will see you all tomorrow and then hopefully tomorrow after the close as well. Have a great day, everybody.